Hello, everyone. Michelle Brienza here. For those of you that know me, you know that I am committed to educating home buyers, first-time home buyers, investors, really anyone who's looking for a mortgage or currently has a mortgage. And I really want them to understand how politics actually impacts policy and ultimately how that policy impacts their mortgage rates and really how lenders lend money when there are market changes like we're currently experiencing. So while there is so much in the world going on from one week to another, things like iPro Realty and the condo market and how all of that stuff is happening in Canada, today I really just want to focus on when politics pushes central banks. Policy decisions actually end up being neutral. And right now, that's what we're watching play out in real time, believe it or not, for those of you that pay attention. But politics does influence policy, and policy influences rates, and the pressure is actually pushing rates lower these days. I have so much that I want to say about this. So, to make sure that I stay in a proper timeline, because I can talk about this forever, I'm actually using a teleprompter, believe it or not, as opposed to looking down on my notes. So, for those of you that know me, you know that I don't like being in front of the camera, but I'm really trying to be more committed to getting information out there rather than looking good. So this is how I am in real life when I meet with you in person. So I'm just going to go for it. So let's start with President Trump. He has been applying some serious pressure on the Federal Reserve, and he wants them to cut rates. And he wants them to cut it by as much as 3 percentage points. And why? That's because he wants to ease the borrowing costs that are absolutely soaring. And so it's not just about economics. That indicates that politics is steering monetary policy. And markets actually call this fiscal dominance, believe it or not. So that's when political needs begin to outweigh the central bank's inflation mandate, because that's what their mandate actually is. So Jerome Powell, he's going to Jackson Hole Symposium this week, and he's a little bit under fire on multiple fronts. The markets are already pricing in a 25 basis point cut in September, and they actually expect some more rate cuts in 2026. But internally, they're a little bit divided. So some members are worried about cutting rates too aggressively too soon, especially when there's something called producer prices. They're still running a little bit hot. Anyways. Here in Canada, however, the story looks a little different, but it actually points in pretty much the same direction. So the Bank of Canada, we all know that they held their policy rate to 2.75% in July, but the numbers are telling us something a little different. Inflation is cooling, and the headline CPI dropped down to 1.7, while the core inflation went down to 2.4, and that's all comfortable within the range for the Bank of Canada. But at the same time, Canada's labor market, we saw it's starting to show some cracks now. And I've been talking about this since last summer. The economy lost over 40,000 jobs in July, and we've been hearing all over the news about this youth unemployment, and it's risen to levels that we haven't seen in a really long time. So these two forces, those things are going to start to ease inflation a little bit more, weakening employment. And the markets are betting on a shift. And so what's happening is that shift is probably going to bring a reduction in rates, hopefully in September. That date is September 17th, by the way. And it used to be a 30% chance of a rate cut, and now it's gone up to a 40% chance. So overall, what's the bigger picture? Politics, policy, and data are all pushing rates lower. Yay! The pressure is building, not because central banks are eager to move, but because the conditions of all of this stuff that I just mentioned is kind of forcing their hand a little bit. And like I said, I've been saying this for quite some time. Politics is driving policy, and policy is what sets the framework for interest rates, and it also sets the framework for how lenders lend. And that framework right now is lending towards rate cuts. So we'll see what the next coming weeks bring. Okay, here's the question. Who's going to do it first? Canada? Will Canada be the first to act? Or is the US Federal Reserve going to move before Canada? For those of you that have gotten this far, thank you for following and watching. If you want to hit the like or put any comments about what you think about anything that I've said, if there's something that you'd like to know about, let me know. But in the meanwhile, stay tuned, because over the next few weeks, the rate outlook is going to change. And I'm here on a weekly basis trying to bring it all to you. And let's see what happens over the next week. In the meanwhile, have yourselves a great day and be well.